we do with this market after the incredible run over the last few weeks, one that very few called? We could speculate about what we'll hear from the Fed meeting on Wednesday. We could try to get a read on inflation. We could pour over the quarterly earnings. And all of those things are absolutely necessary. But none of them would have helped you call this terrific October rebound one of the greatest in decades. But you know who did call it? Larry Williams, the legendary technician and market historian who's been the #1 expert in this space since I was a kid. Larry's written over a dozen books, created a host of his own proprietary technical indicators, which you can find on his website, which is called ireallytrade.com. Plus, he's got an amazing track record, especially since the start of the pandemic. I say this every time we go off the charts with Larry, but that's only because it's important. Remember, he's the one guy, the only one, who called the bottom in April of 2020, back when Wall Street was still very worried about COVID and worried about COVID lockdowns, thought they would last forever. The market would never bounce back. Larry predicted the opposite. He said business would start going back to usual within a month. And that was one of the best contrarian calls I've ever seen until recently. And because at the beginning of this month, Larry explained that the bear market, which everybody thought we were in the midst of, was toast. He predicted that October would give us an incredible bull run. Who else did that? Especially late October. Sure enough, stocks have had an amazing move over the past couple of weeks. No one called this except for this man. What gave him the confidence? The history. Williams searches for patterns that tend to reliably repeat themselves. And when he finds them, they can help steer you in the right direction. Boy, have they ever done that for you. I got to tell you, 4 weeks ago, when he told us the seasonal patterns were about to turn bullish and the bear market would head into hibernation, well, let me say that's a pretty darn contrarian call. Everybody was terrified that rampant inflation would force the Fed to keep raising interest rates aggressively, putting ever more pressure on the economy and, of course, the stock market. There just wasn't a ton of evidence that the Fed was making progress in its war on inflation. But Williams looked at the patterns and predicted the market would catch fire anyway, whether the progress was made or not by the Fed. Since then, we've gotten a lot more data that shows inflation might be moderating, which might give the Fed an excuse to be less ruthless. Now, if you listen to Larry, you would have caught this move. I know that we did for my charitable trust. I listened to Larry. You can't bet against this man. So what does he see now? Well, if the bear market's toast, then you know what he's saying now? He'd say we're looking at toast with jam. Remember this chart of the Dow Jones Industrial Average futures in black with Larry's true seasonal pattern in blue? Here's an updated version. This is what he looked at when he pronounced the bear market dead on arrival and recommended buying stocks on any dip, which is what you had to do. That true seasonal pattern is based on the historical pattern at any given point in the year, and it predicted a monster run through mid-November. And it suggests we've got another leg higher through the end of the year. Can you imagine? Or check out this next chart, which shows the action in the Dow through last week, along with Larry's long-term cycle forecast in red. He's constantly searching for cycles that tend to repeat themselves in a given security, and that red line shows you what he considers the dominant long-term cycle in the Dow. Nice, huh? What is that cycle for? Bulls beware, bears beware. Yet for Williams, this picture confirms the bullish seasonal forecast you just saw, the one that predicts a powerful rally through mid-November, followed by a pause with another leg higher toward the end of the year. How reliable is this cycle forecast? Okay, if you look at the action in the Dow Jones Industrial Average going all the way back to 1900, Williams finds that the Dow has rallied 62% of the time when we're in the current wave of the cycle, the one that gave us this fabulous October advance. Now, that's a lot better than 50-50, but you can say it's not really exactly what we want. But wait a second. When you look at the third wave of this long-term cycle, the wave that starts kicking in around December 9th, that's resulted in a rally an astonishing 82% of the time. Look, if you can find a bet that wins 82% of the time in this business, you have to grab it into it and never let go, because those are tremendously bullish odds. Now, how could we explain this market having a big run through the end of the year? We know that inflation's rampant. We know the Fed's on the warpath. Even if there's some speculation that they might ease up a bit after Wednesday's 75 basis point hike. But what if the economy's in better shape than we're assuming? Williams has a theory. I want you to take a look at this chart of U.S. gross domestic product in black, coupled with the velocity of money in green, except the velocity of money is pushed forward in time a few years, because Larry wants to use it for forecasting purposes. For those of you who never took an economics class or simply don't remember the velocity of money, it represents how often a single unit of currency is used to purchase something within a set period of time. In other words, it tells you how fast dollars are circulating. It's a great indicator. What Williams has found is that if you use the velocity of money to forecast GDP growth, it's been incredibly accurate. Right now, you're looking at the numbers from the 1980s through 2010. So what does this mean for us right now? I mean, well, it's pretty correlated, right? Now I want you to take a look at this chart of GDP growth from 2011 to the present moment. With Larry's velocity of money-based forecast extending through 2025. This picture is telling Williams that next year should have solid economic growth. Next year, I know, it sounds kind of crazy. But it's certainly possible if the Fed backs off from their extremely hawkish stance. Why not? By the way, Morgan Stanley's Mike Wilson, who everybody worships, just put out a bullish call on U.S. stocks last night, making a similar argument. When you look at the money supply, he thinks inflation is likely to fall faster than most people expect, which would give the Fed more leeway to ease up on the aggressive rate hikes. Great minds think alike, although I know that Wilson does say earnings are going to get hurt badly. Here's the bottom line. The charts as interpreted by Larry Williams were able to call this incredible October rally the only person who called it. And I shared it with you from day one. Now he says that this market's likely got even more upside even through the end of the year. I know it's tough to be optimistic after the horrific bear market we've been through, but I would not bet against this man. I would not bet against Larry Williams, not after his storied career. And even if you are only as good as your last call, as some cynics would say, his was the scene this year. I want to take calls. I want to start with John in Florida. John.
Booyah, Jim. I'm a CNBC member since back in 2005. I've been watching your show, so it's
Thank you so much.
First time.
All right, glad to be a member of the club. What's up?
Great, excellent. How about my stock Shopify, which had a great
third quarter? Shopify had a really good quarter. I loved the quarter. I thought it was very good. I'm so glad because I wanted Shopify to do well because I liked them so much. I think that some parts of internet commerce are being consolidated, and they are a consolidation winner. Stocks come down too much. I think it's a buy. That's a new way for me. I've been negative on it for some time. Let's go to Rod in Tennessee. Rod.
Hey, Jim. Appreciate your work. Very informative.
Thank you, Rod. Thank you very much. Sentinel One is a very good company, but, you know, Palo Alto Networks, PANW, has the finest products, the best management, and is the one that I'm recommending in that space, and I'm not backing away. It's Palo Alto that is the winner. Now, listen to me. The charts, as interpreted by Larry Williams, he called this incredible October rally. No one else did. And get this. Now he is ready to say that the market's likely got even more upside through the end of the year. Look, I know it's tough to be optimistic right now, and you heard all day today people said that move that we just had is over. I'm going with Larry. All right, much more Mad Money ahead, including my exclusive with a very hot stock called Republic Services. After a third quarter earnings beat, I'm running through the report with the company's CEO. Then we just closed out the best October since 1976. So why are the wealthy voices on TV talking to us about how dangerous it is to be invested in this market? And you know they do that. I'm going to give you my take, and it's going to be the honest take that you want to hear and been waiting for and haven't gotten. And all your calls, rapid fire, tonight's edition of the Lightning Round. So stay with Cramer.
Shepard Smith here. Thanks for watching CNBC on YouTube.